So, guys, let me take a moment to introduce our guest for today. Today we have with us Sadaf Saeed, Chief Executive Officer of MuthootMicrofin. Since 2015, prior to that, he was in the role of CEO from the period 2010 to 2015. As far as his education is concerned, he did his BCom from Zakir Hussain College from Delhi University, and he is an MBA in Finance and Marketing from IPU University. And he's also a member board of directors at Sadan, and a very warm welcome, Sadaf. And in case I missed any part on your introduction, would appreciate if you complete that. And additionally, like would love to know how it all started for you. And yeah, over to you, Sadaf.
Yeah, thanks, Prince. I hope you can hear me. Uh, so, thanks for the
Yeah,
introduction. I think you covered it. Just to add, I've spent around 20 years in banking and financial services industry now. Last 13 years in building this microfinance business for Muthoot. We started from scratch in 2010. And since then, for last 13 years, we have built an enterprise which is now around 9,300 crores of asset under management, having around 1,200 odd branches, serving around 2.7 million customers. We have around 10,000 employees. So that has been the larger part of my career, has been associated with the financial services, and in the low ticket size and secured loans for last 20 years. Have worked with HDFC Bank, have worked with G Money, India Bull, so several other financial services company, but large part happens to be in microfinance segment. So yeah, that's the introduction. Education-wise, you correctly pointed out, I'm an MBA finance from Prastha Govind Singh University, and did my graduation from Delhi University, Zakir Hussain College, BCom. Yeah, and I sit on the board, which is of Sadan, which is the industry SRO, and was an active player in forming the industry SRO MFIN as well. So yeah, that's the introduction. Happy to join you here.
great. Thanks, Sadaf. So, Sadaf, we also have with us Ravi Bhandari. So, he closely covers the space of banking and financial. So, Ravi, before moving our discussion to microfinance, he has couple of questions. So we take those and then we move on to MFI. So, Ravi, over to you. Ravi, am I audible to you? Okay, let me read out the question. In the meantime, he'll check for. Sadaf would appreciate if you tell what's your view on interest rate in India. Can there be a few round of more hikes from RBI, or we are almost done with the hikes? Or yeah,
No, very important and relevant question actually. I think RBI chose in the recent policy committee meeting that they want to pause for the hike for the time being. I think that was an opportune call. The rate hike, like since last six times we've had rate hikes, and the interest rates have already moved 200 bips up. I think this was an opportune time to press a pause button because it is, I think, the overall macroeconomic situation is conducive for that. Usually, RBI rate hikes used to be in tandem with the Fed rate hike. So, Fed has hiked the rate by 25 bips, despite saying that they might hike by 50 bips and then going back because of all the crisis in the banking system in US. There was a perception that rate might not hike, but they did hike the rates by 25 bips. So it was expected that RBI may follow, and I think a lot of the intelligentsia and the economic kind of analysts were saying that there would be a 25 bips hike, but RBI chose to stabilize the rate. But RBI governor very clearly said that this is for this MPC, the decision is for pause. So I anticipate that definitely there would be rate hikes in future. May not be a large hike, but there could be a 25 bips hike or in future. Uh, and it is largely driven by the inflation. So I think the inflation data which just came recently is quite good. Inflation came down to 5.66, which is below the RBI threshold of to 4 to 6%, the flexible threshold that they have made a post-COVID crisis broke. Earlier, it was between 2 to 4. So I think, but still, if you look at the core inflation, it remains above 6%. So I think RBI's core and the focus is on targeting inflation. So I'm sure that there would be hike if the inflation persists. And the RBI would ensure that the inflation comes down below 6%, which is their target. So there could be rate hikes to answer to your question.
So if I were to ask about medium to long term, so do you see rate coming down anytime soon, or it might take some time?
I think before RBI gets on to cutting rates, I think there would be a pause, and I think that pause will remain for at least, I think, 2 to 3 MPC meetings, and maybe longer. If you recall the rate that was there of 4% before the RBI started to hike rate, it remained that for at least, I think, 4 to 5 quarters, and then RBI started hiking rates. So I believe that before they cut rates, there would be a pause, and I anticipate that the rate hike may not go beyond December. I think this calendar year we would see the maximum hike. Maybe up till September, there would be a hike. Post that, I think there would be a pause button for a while, and RBI would see that GDP continues to grow and inflation comes down, and then maybe when the inflation is under control and they feel that the core inflation and everything is under control, there might be a rate cut. We should remember that this is predicted to be El Nino year, so there could be a deficient monsoon. So the crop could be affected because of that. But there has been recent news that the monsoon estimates are likely to be on target around 96%. It has to be like below 95% to be called deficit. So I think we are on the borderline, but if the monsoon rains hold good, then I think the inflation can be controlled, provided there is the crude prices don't go out of control because of the macroeconomic situation. And inflation, if it comes down, then I think to support GDP growth, RBI may cut rate. But I think in the short to medium term, I think there would be a pause before there would be a cut, and there will be a long extended pause, and then the cut of rates.
Right. And like we think there can be pressure on urban household in terms of high interest rate on their debt, especially home loan, as EMI as a percentage of disposable income is going very high. So currently banks are adjusting tenure, keeping the EMI increase cap beyond a certain point. So what's your view on this?
Yeah, good that you make a distinction between how the inflation impacts urban and rural segment, because it does impact differently, and also on the economic strata of the society, which is slightly upper middle class or rich, and the lower middle class or the poor. It impacts differently. So definitely for the urban class, the concern with the inflation and the rate hikes is that. The EMIs will go up because beyond a point, I think the tenure can't be extended, and there would be the increase in AMI depending upon the age bracket that you are in. So that definitely impacts, and incremental loans become expensive. So that really impacts the budget of the household. But important to make a distinction between the urban and the rural class, because and the economically well off and not so privileged class, because in the up in this tech segment, if you look at economic pyramid from like rich and middle class, lower middle class, and poor, then the rich and upper middle class basically the impact of inflation and the rates is that they cut on the luxuries but maintain on the essentials. So the life doesn't change, but yeah, consumption changes a little bit. But the real impact of inflation, that's why they say that inflation hits the poor the most, because when the prices go up, the poor and the middle class has to cut from essentials. So what happens is that they firstly compromise on their health and well-being. That is, that nutrition goes down, so they might start consuming less of milk, less of expensive item like butter or anything like that. So I think there the impact is more long term, because if your nutrition intake goes down, your productivity goes down, that has a much more lasting economic impact. And if the household reduces budget from the medical expenditure or the medical cover or any treatment, then the impact is more long lasting. The impact for the urban or maybe the a little bit rich household is slightly lesser as compared to and not so long lasting. It is more in a sense that they postpone the payments for luxury items, like if they want to purchase. But yes, it does impact the budget overall for everyone.
Right, Sadaf. So, Sadaf, like HDFC Bank result is most talked about these when this weekend. So any take on the result, because there is a diverse view on the quarterly update.
See, I normally kind of restrain myself on commenting on results. I do kind of observe them and I do share them, but I don't. But since you ask, I think it's a quite a robust performance I see from the HDFC Bank result. A bank of that size growing at a 20% pace is incredible and phenomenal. I think that kind of growth rate, if the bank can maintain of that size and with the asset quality that they have, with the GNP of around 1.2%, I think that's fabulous. I think the pressure on the rates definitely will happen, because deposits need to be mobilized. So there would be NIM a little bit pressure that would be there. The previous interest margins will not be there, because there was a huge kind of benefit of excess surplus being available in the market and people depositing money. But now I think the rates have gone up because with the credit growth, the demand of deposits for all banks has increased. So that will definitely impact them a little bit. But having said that, I think their advances have grown in line with the what projection is, and their asset quality remains to be good. They have invested quite a bit in expanding branches, so I'm sure the bank will continue to do good.
Thanks. So, Ravi, is it fine for you? Can you speak now?
Am I audible?
Okay. Yeah. Go ahead, please.
Hi, good evening, Sadaf sir.
Yeah, hi
Uh,
Ravi.
I, hi, I was thinking about in the microfinance sector, say we track few listed companies and few unlisted companies, and they all are talking about very strong growth after a very long time. How you see the entire sector panning out for next 2 3 years? What kind of growth we should expect for the microfinance sector, since the growth has been dull for past few years? How it should pan out for next 2 years, 3 years? What's your view, sir?
Yeah, definitely. I think the growth is back, and you would definitely see in the results for March quarter. All of the large microfinance institutions have reported robust growth. We ourselves has grown over around 47% in terms of an AUM. And I think there would be robust growth by all the large financial services or microfinance companies. And 25% growth and above is definitely possible for the current financial year also. And this is coming from the back of, like, as you correctly pointed out, during COVID, or there was a little bit of a stagnation of the portfolio. In fact, there was a little bit of a drop in the portfolio in 1 or 2 quarters also, because there was a lockdown and there was no disbursement that was possible. And in the second lockdown, where the collection was happening, but the disbursement was not there. So there was a short kind of a drop. But now the market is completely open. In fact, it is boosted by the new regulations that have come in. RBI liberalized the NBFC MFI, or the microfinance policy itself. And they brought in uniformity in terms of policy. There was earlier a different policy which was applicable to NBFC MFI, and a different applicable to banks like SFBs and other commercial banks. But now there is no regulatory arbitrage. There is a uniform policy. There is a redefinition of the target segment also. So earlier, the restriction of lending to microfinance was to household with income of 1.25 lakh in rural, and up to 2 lakh rupees in income. That itself have been revised to around 3 lakh rupees per household, and it is for urban and rural same. So there's a huge kind of a redefinition of the target segment. So that really creates a scope for lending. So I think, given the regulatory guidelines, and given the credit push that is coming in and the opportunity that is there, the credit growth will continue to be in the range of 25%.
Great, sir. Great. I guess when RBI pushed out that study for where they put the limit 3 lakh per household for the MFI, somewhere the discussion was the household which might comes under the MFI segment would be something around 25 crore approximately, which would be 3 to 4 times of the current market size. Uh, your view on that is the market size for microfinance, combining everything, NBFC, MFI, and the banks and NBFC, other NBFC, is it 3 4 times? Can that be the market size of MFI?
See, currently, if you look at the number of household that we are serving as an industry, is around 6.5 crores household that we are serving. Definitely, there is a kind of a market available which is 2 and a half times of the numbers that we are serving. So that market is definitely there. You're correct in terms of the assessment of the households that are available, around uh, 22 odd or 23 odd crores. But if you look at really totally addressable market, it is somewhere around 18 to 19 crore households that can be served by microfinance. And I think that is where the growth is going to come from. I think the reach of microfinance is improving, and I think the biggest push is with the Jam Trinity, which is Jandan Aadhaar and mobile. We are able to reach out to like all the customers and have a much more robust underwriting platform. So definitely there would be deeper penetration, and there would be more relevant kind of products also which would be given to the household. So uh, a deeper engagement with the existing customer will also help the industry to grow.
Great, sir. Great. I'll pause here. I'll ask Abhishek. Abhishek is head of research at Arihant. If Abhishek, if you have any question, you can chip in. Otherwise, I'll come back.
Hello, Sada sir.
Yeah.
Thank you for taking my question. Thank you, Ravi. Sir, just want to understand now people are talking about El Nino, and as on a ground level, what we are checking right now, there is no slowdown, at least for the time being, in the rural economy. So, last 2 3 months, whatever the channel checks we are doing, sir, what how you see as a microfinance company, what kind of proactive measure a microfinance company should have taken, and like what exactly you are saying the impact, because obviously we have seen in the past there is some cut down in the summer sown crop. So how exactly you see going forward things are going to be there for the microfinance companies?
Yeah, so see, in the short run, we don't see any impact as such. I think there are obviously concerns about El Nino, but the recent data which has been released by IMD and government is showing that there would not be like deficient rain. The range that they have proposed around 96% estimates in terms of rain, so which does not classify into deficient rain. And if that remains, then I don't see that there would be anything in terms of a slowdown. In fact, more recently we have seen more demand coming in from rural, and there is a little bit of a more buoyancy. And to be honest, like a lot of the rural area cash flow is linked to these crops, and a lot of it is also from the government activities like elections that are coming. There would be Lok Sabha elections in 2024. So before that, there is generally a cash flow which comes into the economy, especially in the rural economy. So I don't see any serious concerns there. The demand is definitely there. You are seeing credit growth across the industry, be it banks, be it MFIs, be it NBFCs. So there is definitely demand, and even you can see that sales of two-wheelers are going up, and sales of other vehicles are is also going up. So there is, I think, enough demand. FMCG, yes, because I think the prices have gone up, and there is an inflationary trend. Maybe in terms of value, there would be kind of a challenge, but I think volume, sorry, the other way around, the value may be growing, but the volume may not be growing so much. But I don't see our feel on the ground is that there is no slowdown as such, which is very apparent, and there continues to be demand for loans and products, and the rural borrower continues to kind of borrow, and they are more than kind of capable of repaying now, because the income levels have also improved to an extent at the rural area because of direct benefit transfers on various schemes and various benefits that the governments have announced for them.
Thank you, sir. Sir, just a follow-up thing. So you are talking about 45% growth this year. What kind of growth estimate you are seeing it for next 2 years for the industry? You can talk about general number, like how exactly you see. And second thing, do you see any risk of asset quality or maybe increase in the credit cost going forward, sir?
So, as far as the industry is concerned, I think there could be a growth rate between, I think, 25 to 27% between the next year, the current financial year, and the next year. Our personal growth was around 47% because we were coming from a 6,300 crore base to around 9,000 crore base. So a smaller base coming to a larger base. So that growth was there, and also we were the ones who were able to raise capital during the COVID period. So we had that capital base, and we could leverage on that and borrow money from banks and lend. It's all a function of how each of the entities are able to kind of capitalize themselves and grow. But I anticipate the industry may grow around 25% for the next year. It can go up by 27%, but that definitely will continue. Asset quality, I think it has improved dramatically if you look at from the last financial year. And the good part about microfinance is that all the loans are shorter tenor, around 2 years is the maximum loans generally. There might be some loans which are 3 years, but 90% of the loans are 2 year tenor. So they run off quickly. So whatever portfolio that has been built post-COVID, and I'm talking about say June 2021 or July 2021 onwards, the collection efficiency on those portfolios is excellent. Almost all the industry, if I speak to, they have 99% repayment on time. So we don't anticipate any future credit shocks as in terms of higher credit cost. whatever credit cost has to be taken is to be taken for the previous portfolio, which is being carried in some of the NBFCs or MFIs, where in COVID they have not taken enough provisions or they have not done enough write-off. For us, as an entity, we have already kind of written off whatever was needed to be written off. The credit costs are coming down, the repayment rates are going excellent. In our case, the post-COVID portfolio represent almost 95% of the book, and the collection efficiency on that book is 99.6%. So I anticipate that overall asset quality will definitely improve in the long run for microfinance industry. There is a little bit of a write-off which will come this year or by June first quarter, which would be the overhang of the portfolio which was getting impacted in the COVID. But post that, the asset quality would be very robust, barring any kind of a macro event of any sorts. But I don't anticipate any event. The good part about the regulation is that the new regulation, two, three things have happened. One, the income level definition that has come for from 1.25 lakh to 2 lakh to 3 lakh now. Then there is a rate liberalization. There was a rate cap earlier. There was a margin cap of 10% for large entities and smaller entities around 12%. Now that margin cap has gone away, and each of the entities is free to price their rate, and which is the case for any financial services entity in India. RBI does not really keep a rate cap on entities, it does keep a watch on the rates. So I think that allows NBFC, MFIs or MFIs to price the credit as per the risk that they perceive in the areas that they are operating. If it's a difficult area, then credit can be priced a little bit higher. If it's an easier area, the efficiencies can be passed on to the customer. So that allows a little bit of a risk management there. Then the third thing, which is very important in the new regulation, is there is no regulatory arbitrage. So earlier there was a little bit of an arbitrage because of which banks were allowed to lend at a little bit higher amount because there was a two lender restriction for MFIs and there was a loan cap also that was there. But now nothing like that is there. There's an FYR based lending that is there where that FYR has been fixed as 50% of the household income, which is like if you have a 3 lakh rupee income, the total outstanding loan that you can have is 1,50,000. And if you look at the industry, the average outstanding per household is around 70,000 rupees. So there is almost a 50% gap that is there per household that we can lend to. So growth would be there, and the FIR based lending will ensure that there is no over leveraging of the customer and over indebtedness. So that really will help. Over the years, the data of microfinance has also become very, very robust. If you look at the credit bureau information, the credit bureau information is more elaborate than any other kind of industry, be it like the consumer lending space or even the commercial lending space, corporate lending. So the data from a credit bureau is very robust. MFI report almost on the daily basis the status of the loan. So the data is very, very robust. So that way, I think all of that will ultimately result in improving portfolio quality and improving asset quality, lower credit costs in the microfinance.
So last question, if Ravi, I can take, and Prince, if I can take. So how you see compared competitive intensity between the banks like Bandhan Bank or traditional MFIs are converting into a bank or Equitas or Ujjivan and ourselves? How you see like where exactly is our moat is there in this business?
Actually, sir, to add to that question, like what we are seeing on the gold loan side, the banks are actually got very aggressive in last 2 3 years. So, what's your take on this side? Like Kotak, I guess they announced to acquire Sonata, and IDFC also announced something they are looking to buy. So, what's your view, sir?
Yeah, so I think two questions there, one on the gold part and the other one on the competitive intensity with the banks and NBFC MFI. If you look at more recently in the data which is published by MFIN and even Sadan, the market share for NBFC MFIs is going up as compared to SFBs and banks. So banks, because as I said, because of the new regulation, the regulatory arbitrage has gone. So the banks also have to follow the FIR guidelines. So their lending, which was slightly higher as per loan, has to come down in line with whatever is the FIR permit. So that's why there is a reduction in a little bit of banks outstanding. And also, I think I can't speak for other banks, but what I gather from market intelligence is there is a focus on more non-MFI portfolio among the banks, and especially the SFBs and maybe Bandhan as well. So the space would be more available for NBFC MFI to grow. So definitely NBFC MFI will grow faster than the bank's portfolio. And by the time the banks kind of reposition themselves in what portion they want to have MFI and what portion they want to have others, MFI will continue to grow. The second question on the gold loans part of it and how we are seeing. So, see, gold loan is a very different segment as compared to microfinance. So, microfinance, the competition or the acquisition of the customer or a balance transfer of a loan is not as easy as gold finance, because in gold finance, as long as you have got the possession of the gold and you have assessed the gold correctly, you are safe. But in microfinance, first you need to know how to underwrite a loan. Second, you have to service the loan. So you have to have the wherewithal of the field staff to go to the customer and collect installment. Largely for the industry, the disbursement has become digital, 90% and above. For microfin, it's 100, MuthootMicrofin, it's 100% digital. But for collection part, still we have to go to the field and collect from the customer. So that thing to acquire from the existing players is very difficult for the bank. So either the bank have to have like what Kotak has done, and an arm like Sonata or BSS, like what IDFC has done. They had acquired Gram Videal, or what IndusInd has done as Bharat Financial. They need to have that kind of an arm. Otherwise, I think it will be difficult for banks to take over MFI portfolio, just like what they have done with the gold loan portfolio. They have partnered with some tech company, and they have kind of done BT transfer, and they are playing on the rate, which is their advantage over the NBFCs. But it'll be difficult for them to compete in the segment of microfinance, because the feet on street and the touch, which is with the customer, is very essential, which will only come with your distribution, which banks do not have and may not be able to afford unless they acquire companies like what some of these banks have done.
So do you believe that co-lending will be the way for the banks to grow in MFI space? Maybe a partnership with some of your companies like yours?
Yes, that I think definitely would be a way to go. So where they would partner with NBFC MFIs and start a co-lending kind of there is already a quite robust business correspondence partnership with banks and NBFC MFI that might change into a kind of a co-lending partnership. So that definitely is possible.
Yeah, thank you, sir. My questions have been asked. Thank you, Ravi and Prince.
Thanks, Abhishek. Let me bring in Ashutosh. Ashutosh, I guess, is head of research at Ashika. He used to earlier cover BFSI segment. Now he's head of research. Ashutosh, unmute yourself and ask your question.
Yeah, yeah. So my question is on operational front. So what type of change you are witnessing in the operational front in the MFI industry? Like the payment system in India is changing substantially. So I want to know from you that what type of change on the way we conduct the weekly or fortnightly or monthly meetings, whether the disbursement is taking still all in the cash, or there is a difference between recovery and no, disbursement and recovery of the loan in the cash versus digital collections. So I want to understand from that perspective, from the what on operational side the changes is the industry is doing, which can bring the operational cost down for the industry.
Yeah, thanks for the question, Ashutosh. I think that has been by far the biggest change that has come into the microfinance industry. As I said, disbursement is almost 90% in our case, 100% into the customer's bank, thanks to the Jandan Yojana that the government has run. So now everybody has a bank account, and mostly it's a active bank account. So we are able to disburse 100% of our loan directly into the customer's account. On the collection front, I think that is the biggest revolution that is coming in, and I think that will determine or differentiate a successful MFI from a laggard one, is how quickly you are able to kind of develop a system where you are able to collect digitally. So, for example, in our case, we have 34% of our collection, which is absolutely digital. And when I say digital, it is bank to bank, from customer wallet to our wallet. It is not like a quasi digital, which is also a lot of people are using, and we are also using, where the customer or the group collects the money and deposit to any of the outlets, like a payment bank outlet or any sort of a CMS outlet, which remits money to us and transfers the money to us. So if you include that also, almost around 80% of our collection has become digital. So I think that is the biggest revolution that is coming in. And with that, what happens is you are able to kind of get a digital footprint of the customer. What we have done, we are definitely encouraging this. And digital collection is not only kind of change in process, but it's also change in behavior of the customer, because customer is used to dealing in cash, and their cash flow also is mostly in cash, so they like to pay in cash also. But what we are trying to encourage is to change this behavior and pay digitally. And for this, we also offer a small amount of cashback, which is 10 rupees per transaction, a cashback to a person who's paying digitally. So I think that kind of encouragement will definitely improve more digital collection. It will lower down the cost of operation. It will improve productivity. Like field officer will have more time to spend on sourcing new business rather than collecting. And it will also, on the analytics side, give you an information that how many customers are like regularly paying digitally or they are paying in cash. So you can develop a digital footprint with us. So now what has happened, Ashutosh, most of the MFIs, and I'm talking about the big ones, have also developed customer apps. So we have a digital app, Mathoot Mahila Mitra. So this app is available with the customer. We have been able to, out of the 2.7 million customers, around 1.2 million customer, we have been able to download this app, and almost around 6 lakh of those customers are actively transacting month on month through this app. So they are transferring money from their bank account or their wallet to our wallet or our bank account directly using this app. So BBPS system and UPI has reached to every corner of the country in the remotest corner. So I think that has really kind of enabled the digital payment system, and I think that will be the biggest game changer in the future. I think the operating cost that we are talking about for large MFIs now is in the range of 5 to 6%. Definitely, if we continue to have more and more kind of digital transaction, those cost of operation can come down to 4.5 or 4% as well in the long run.
Thank you for such a wonderful update on this whole part. And just on the meeting, weekly meeting or monthly meeting, is there any change in that part of it? Because I'm hearing from some of the smaller or mid-sized MFI that there is some change in the way the group meeting or week used to be. Because of the COVID, lot of disruption as seen in other industry. So here also we have seen some changes. So can you highlight on that part?
Yeah, so I think first of all, the meeting or choice of the repayment frequency is between the customer and the entity. Now, earlier it was a mandate for RBI that we need to give all the options to the customer, and customer will decide. But now it's more liberal, and it is up to the organization to decide what should be the repayment frequency, weekly, monthly, or fortnightly. If you look at in the industry, almost I think 60% or maybe more than that, around 65% of the industry has moved on to a monthly collection, because that is more cost effective and even the customer prefers that. And even during COVID, people wanted less of an interaction, and because of this spread of COVID, so most people went on with monthly. And there are few entities, and some of them are large entities, still continue to be in a weekly model. While there is merit on both the sides, having monthly as well as weekly also. As far as we are concerned, we have both the models. So we have 70% monthly and 30% weekly. And I think the more important part, which maybe you wanted to know, is the how is the response of the borrower, because the
Yes, yes.
monthly meeting or what is the attendance. So while before COVID, we used to insist on 90% attendance in the center meetings where all the borrowers come and repay their installment. Obviously, during COVID, it was not possible, and it was for good reason that we didn't want to risk lives of our customer or our field agents. We did not used to ask all the members to come in, but slowly, gradually, that discipline we have brought in. But from 90%, that the attendance in the center meeting has come down to around 70-75%. But the repayment rate continues to be same. So post-COVID portfolio, as I said, is 99% and above for the industry. But attendance discipline is slowly coming back. It was really low at initial stage when COVID restriction was there in place. Then slowly, gradually, it came back to around 50-60%. Now it's at 70-75%. And slowly, gradually, I would see that it would be around 80-85%. Yeah.
Thank you for answering my both the query.
Thank you.
Thank you.
Thanks, Ashutosh, for your good questions. So, Sadaf, how is MSME looking? I see most of business has been rooted to bigger businesses. How will smaller players make a mark in high interest rate scenario where cash flow issues and business compression is obvious? So, even smaller micro loans have challenges due to lower income strata not improving. How this sector will pan out in, say, next 12 months? What's your view on this?
Yeah, I think it's important to understand the rural economy when you answer such questions. And so basically, what we are looking at is the what is the cost of alternative funds. So when you are looking at a rural borrower or a rural entrepreneur who's running a small kirana shop but does not have any collateral to offer, and if she has to borrow to buy inventory or buy something for some equipment like a tailoring or a sewing machine to start a business and stuff, what are the avenues of fund? The avenues of fund in absence of a MSME loan or a microfinance loan is to a local money lender. And that local money lender, one, he would ask for a lot of kind of papers, as in papers of her property, whatever in the whatever format she has, if she has. And then the rates are very high. Rates are as high as around kind of 10% per month, which is around 120% and above. So those kind of rates are there. So we have to look at from that context. When they come into the formal financial services segment, the rate is substantially lower than the rate that they have to pay to the informal segment. That's why they prefer to borrow with MFIs, or that's why they prefer to borrow with MSME or very micro loans that they are borrowing. So I think that is the core reason. That's the first point. Yes, I think with higher interest cost, obviously the margins get affected for the borrower. For her to maintain her margin, because input costs have also been on a rise. Wages are also slowly, gradually rising because of the inflation. People are demanding more money. So that does play a role. But I think the larger entities like us and some of our competitors have been able to offer competitive rates, because we have been able to borrow rates at a decent rate from the banks, even though the repo rate has gone up by 250 bips in last kind of 18 months or 12 months. Our rate for us have gone up by around 50 bips or 60 bips odd. So and we have also hike rates in that range only for our borrowers. So I think that definitely kind of helps the borrower to ensure that they don't have too much of compromise on their kind of earnings.
Right. So Ravi, you go next.
So one few question on state and region side. How is industry-wide performance for microfinance in Assam and northeastern states now? I guess some guarantee was given by the government. Have the money started coming in, and have the industry started to lend again in that region? Uh, what is your view there, and what would be any incremental cost you assume on the credit side might come from that region?
Yeah, so first of all, disclaimer that we don't have any operations in Assam and neither we had earlier. So I don't have the on the ground opinion on what is the government doing and what is the borrower kind of impacting. But I have a kind of a ringside view because we are an active part of the industry and we know what is going on in there. So we know what is there. So from that perspective, I can tell you that small amount of lending has started, but the crisis which was there in Assam was largely restricted to lower Assam. So upper Assam was still okay. But the government had intervened and ensured that the impact is not felt by NBFCs and people who are lending in that space. So they had given a guarantee of the loan, and there was loans. The tenor of repayment was extended for the affected parties. So first tranche of that payment has been released. Second tranche was supposed to be released in March, which has been delayed a little bit. But since it's been backed by the government, we anticipate that money will come in sooner rather than later. So I think if that money comes in, the credit cost would be minimal, and whatever was there, people have already kind of taken those hits and written down those portfolios. So I don't see a major impact because of Assam unless government kind of changes its stance of paying back that guarantee.
Understood. Understood. And sir, one question on the risk side. Say we were talking about how tech will help in bringing efficiency for the microfinance companies. Earlier, we used to hear that microfinance is more of an operational heavy business, and the cost OPEX ratio would be 7% or even higher, and hence banks were a bit of the reluctant side. But as you were saying, that collection we might move to monthly instead of bi-weekly. The OPEX ratio we are hearing from the industry side is coming down somewhere around 5%. Will it open the gate again for the bank to become interested because of technology? They are finding it more less operational heavy than it used to be earlier.
Yeah, definitely. I think the cost of offering loans will go down with the use of technology, and we have seen this. And I can tell you, being a part of the industry for last 1.5 decade, I can tell you that there was a time before Andhra crisis happened. People used to operate at a operating cost around 15-16%. But then obviously Malegam committee came in and Malegam committee capped the rate at 26%. And then everybody had to overnight bring down the cost of operations, and people did. So the cost of operation came down to 7 to 8%, and people innovated the model from weekly, they went to monthly. The cost of operation came down, and they used technology quite a bit, and that's how the operating cost came down. Now, I think what we are seeing even further innovations are happening within the industry. From digital disbursement to digital collection, there is a lot of initiatives that have been taking place with the robust infrastructure that the government has provided in terms of Jandan Aadhaar mobile and UPI combined. I think a lot can be done, and there is another kind of intervention that is coming which is in the account aggregator space. So once you have the account aggregator system also integrated and it has all the banks and all the information, the underwriting would be a lot more easier, and you would be able to kind of make better decisions. So I think sourcing will become easy, and obviously underwriting will become easy, and hence the collection will also be easier, and most of it will move into digital format, and only the loans which are maybe bouncing like a default would be followed up in the field. In the long run, that's what I'm saying. So operating costs will come down for sure in the long run. But in the meantime, I think we need to transit from this phase to that phase, which will take, I think it can happen very rapidly also. If it happens rapidly over the next 12 to 18 months or maybe 2 years, it may happen. But I suspect that there would be an element of touch that would be needed, because even though this will become a digital model, it'll be an assisted model where you would have to educate the customer, because even though the financial literacy to an extent has reached, but digital literacy is still developing over the period of time. People are becoming more comfortable transacting digitally. So that has to be taught. And once I think the infrastructure is in place, the customer is comfortable to do it, then they would be. The biggest change that I'm noticing, so you mentioned about it, the earlier model was that it's an operational risk kind of a management business where you manage your operational risk well, you are fine. And it's more or less similar kind of a thing if you lend to a customer A versus customer B. But now it is moving from an operational risk to a credit risk kind of a system where you have to underwrite each and individual customer separately and understand her credit profile, because now you don't have to only look at the credit behavior of the customer. You have to look at the credit behavior of the household. You're taking household income and you're taking household obligation. So you're taking the customer and her spouse and all the earning members at the household, their credit behavior. So there is a lot more information that is coming in, so you are able to underwrite. So it's a more evolved credit decision that you are making. So it's a less of a operation risk, more of a credit risk. But yes, the operation has to be robust. So operation risk remains a little bit heavy in this, but it's changing towards a credit risk kind of a business. That is how it's changing over the period of time. And I think maybe in the coming days, you will have much more individual loans happening than just group loans. It doesn't mean that group loans will go away, but I would see that if the portion of individual loan is hardly 10% of the portfolio or less than that for MFI industry, it may be around 70-30 or a 75-25 kind of a distribution between an individual loan being 25 and 70% being group loan.
Great, sir. I'll have one more question and then I can ask Abhishek to come in. So one thing, there is a view which appears is, say if we track few companies, HUL, when they mention about the rural growth, they talk about the volume decline. When Hero talks about volume growth, they talk about entry-level bikes not able to pick up, uh, despite COVID completely out of the picture. The same with few of other FMCG player, Imami and Bajaj Consumer. Uh, but when we track microfinance, the growth has been very, very strong. How much of this is more of increase in lending per household, and how much is actually increase in terms of new household being added? And what how long it can continue that the ticket size increases and we able to see that witness that 25-30% growth continuously coming.
Yeah, I think the key parameter that we track our operation on is the acquisition of new to credit customers. So there's a bifurcation of the portfolio between new to credit, new to Muthoot, and existing customers. We definitely, the industry also tracks new to credit customer, and the growth that is coming from the new to credit customers, or the customers who are not like kind of existing customers of the organization, may not be new to credit, may have a loan from other MFIs or microfinance lenders. So that grows is the organic growth that is coming in. Apart from that, the business that we run is the business that retention of the customer and graduating the customer from one cycle of loan to another cycle of loan. They pay their loan over a period of 18 to 24 months, and then they borrow another loan, which is a slightly higher ticket. So they start with a 30,000, then they take a 40,000, then they take a 50,000. That's how the business is run. So organically, like by the nature of the business also, you will have a ticket size increase among the borrowers. But if you look at the average outstanding per borrower from the industry side, it has not changed drastically. So it has changed maybe around 10% on an average ticket size, average outstanding per customer. So from that perspective, largely the growth is coming from the new to credit customer, newer acquisition, and that is also witnessed in the customer base because earlier the customer base for the industry was around 6 crore. It has already reached to 6.5 crores. The March data is yet to come out. I believe it will be around 6.75 odd crores. So I think the growth will continue to come as more and more household getting catered by microfinance institution. It'll be a mix of both, a higher kind of an exposure per household as well as newer customer getting added into the microfinance space.
Abhishek, if you have any follow-up, you can go next.
Last question I would like to take, sir. Do you see in terms with cost? Because as you said, now the cost is likely to remain great. When the rates are likely to remain flat, and then it may go down. How you see on the lending cost for the most of the MFIs? How you see going forward? And second thing, there has been a discipline in the system for last 18 to 24 months by the MFIs. If any slowdown, do you see that discipline can be broken? And third question is largely on the smaller MFIs. How you see going forward for them growth potential?
Yeah, no, three questions there. I think I'll take the last one first. I think definitely on the smaller entities, it's a little bit of a more challenge because the last 2 years have been difficult for anyone to raise capital, especially in the lending business. So people who do not have adequate capital, for them, growth will become a challenge. And also, I think the lack of capital also hampers their ability to write off the bad portfolio which was there. So that definitely becomes a uh, double-edged kind of a situation where you are not able to write off past bad loans, and then you are not able to raise enough capital to future growth. So for smaller entities, key will remain how efficiently they are able to raise capital. I think more than the valuation right now, the importance is the availability of the capital or the capital infusion. So you will see larger entities grow faster and more, and the entities which are supported by large promoter group or large kind of banks or industry houses, they will grow very well, and they will be able to attract loans. On the interest rate side, I think in terms of the cost of fund for MFIs, I think if you recollect before COVID when the rates were being cut, or during COVID when the rates were being cut by RBI, the same rate cut was not passed on by the banks to the borrowers, like for example us or NBFC MFIs who were borrowing from the bank. So the rate came down to repo rate came down to 4, but the same benefit was not passed on to the NBFC MFIs. So I think what has happened is the banks have enjoyed the margin till that time, but similarly, the banks are not passing the entire hike also to the industry. So we may see say a 25-30 bips hike in the interest rates maybe in the next 12 months time if there is an more than two hikes that are done by RBI, but not beyond that. I think our rates are almost at the peak level for NBFC MFI in terms of borrowing cost. What NBFC MFIs have also done over the period of time, they have diversified their sources of borrowing. So there is a lot of NCDs which are being issued by NBFCs. And before the regulatory change came in the tax structure for MLDs, a lot of MLDs were also being done. So through that, a lot of funding was raised. Now, lately, a lot of ECB has also been raised. There has been a little bit slowdown on the ECB because of the volatility in the dollar rates, and the interest rates. So that's why there's a little bit of a slowdown. But I would see in future more external commercial borrowing would be raised, and definitely like more NCD issuance would be done. So the dependency on the banks will go down. So I don't see too much impact on the cost of fund. Maybe in the next 12 months, around 25 bips to max, I can see. And there was another question that you asked. Abhishek, could you repeat the first question that you asked?
My questions have been answered. That's a
Okay.
part of the question only right now. Thank you, sir.
Thanks.
Thank you, sir.
Thanks, Abhishek. So Sadaf, like we are almost 1 hour, so just wanted to check, are we good on time, or shall we wrap it up? I mean,
Yeah, I'm happy to answer any question other than that if there is, but I think,
okay,
yeah.
yeah. So we have a couple of questions from Ravi, and for our attendees also, like last 10-15 minutes maximum. So in case you have any questions around today's discussion, so surely please send in a request. I'll approve and you can ask. So yeah, Ravi, over to you.
Sir, since there are lots of people who are retail investors in this call, what are few, three, four key parameters they should track in understanding the risk for microfinance sector, if something is building up, and how they can identify, if you can highlight?
Yeah, thanks, Ravi. But I generally refrain from advising on portfolio level decision. But I can tell you, since on the benefit of this call, I think two, three things which are very critical for MFI is one is the cost structure. So you would have to look at what is the operating cost structure, which will overall determine the profitability of the entity. If the operating cost structure where the OpEx is going down, and this is because of more kind of efficiency that is getting built into the system, use of technology, then it's good. So that is one. The second, obviously, is the credit cost. The credit cost should be going down in the current scenario. More and more kind of collection efficiency is improving. So you need to track collection efficiency, which is on-time collection, that the repayment rate for the MFI is at 99%, 98% or below that. If it's below that, then obviously there is a potential that lower collection efficiency might lead into higher credit cost. So I think these are two, three key parameters. One also is important to track what is the average outstanding per borrower. So if you see that the average outstanding per borrower is increasing very rapidly, then the MFI, rather than expanding in terms of an operation, is increasing more risk on the existing customer. So which is not a healthy sign. 10-15% average ticket size increase is fine, but if it's getting doubled or getting almost like 40-50%, then definitely there is a risk. I think if you track these, you should be kind of safe.
One more question, if I can chip in, sir. What, according to you, should be ideal ROA, ROE for a microfinance companies? Uh, should they be making 4%, 4% plus, or it can be even higher, like gold loan business? There are even higher ROA. And since microfinance, they are mostly well capitalized, some 20-25% capital adequacy, so they don't gear up too much. What, according to you, should be ideal ROA and ROE for microfinance, given if there is no hiccups, no demand, no COVID kind of situation for next 2-3 years? What should we think as normal scenario?
So I think the first point that you made is very valid. So because the leverage is less for most microfinance companies, large entities, they are sitting in a large capital base. So I think ROE is not the right parameter to track. While obviously you would want to know what is your return on equity, but that because of the leverage will be a misleading indicator of a performance. But ROA definitely is a right indicator to look at it. From an ROA perspective, see, obviously, I would not advise people who are into trading, but people who are in a believer in microfinance and are taking a long-term position, you have to look at ROA from a perspective of 4 to 5 years. So, microfinance is a cyclic business. So you have cycles where the business growth would be good, profitability would be good, and the business will continue to grow. But then after 4 or 5 years, you might have a event like what we have in Demon, what we have in Kerala floods, for example, or a COVID for that matter. So you might have an event. In that event, your credit cost may go up, and then your profitability might become compromised. So in the long run, in a 4 to 5 year kind of a tenor, 2.5 to 3% ROA is a good return on asset. But on a short run, you would see the industry in the meantime, because it's a cycle has turned and now it's up. You would see good companies reporting 4% ROA and above, and it may go up to 5% ROA also for a shorter period of time. But I would advise anybody who's taking a call to look at 4 to 5 year kind of a horizon and then arrive at an ROA rather than just looking at a 1 year ROA figure and making a decision.
Sure, sir. Thanks for answering all the questions, giving us so much time. I'm done, Prince. You can take over.
Yeah. So thank you so much, Sadaf, first of all, for agreeing doing this great session. And it was really great to have you today. And you wonderfully explained all the questions. And thanks to Ravi and other speakers who are asked relevant questions so as to get the best out of Sadaf. So guys, like those who are new to Sadaf sir, so basically he you can check out his handle and you will find great information about this space, and surely you don't want to miss out on that. So with this, Sadaf sir, any closing remarks before we close?
No, thanks a lot, Prince, for organizing this. This was indeed a kind of enriching experience, and I liked it. Definitely, we can do this in future as well. You can check out my timeline. I usually follow the financial services space and comment about it. And microfinance have been a passion that I've been involved in, and a lot is happening at the bottom of the pyramid. So I would love to play my part and educate people to be aware of what is happening at the bottom of the pyramid of the financial services system. And definitely, microfinance play a great role. Earlier, we used to be looked at as a tool for financial inclusion, but I think more importantly, we are becoming a very, very robust pillar of digital inclusion and digital literacy. So I think there is a lot that is happening. And I think Prime Minister in his recent speech spoke about how relevant microfinance is and how relevant this loan is. So we tend to kind of look ourselves as double bottom line business, which is social impact as well as the profitability. Profitability, which is essential for any business to be sustainable, but we are driven by the impact that we make, and the impact that we are making in the lives of the poor people, improving their living standard, improving their health and hygiene. So I think that's important. So I would encourage everybody to have a deeper look. Not only financial services, we also ensure that people at the bottom of the pyramid get right kind of healthcare services. There are e-clinics which are run. There are other benefits that are passed on. So I think it's a good ecosystem, and I'm sure it'll continue to contribute to the society and to the GDP target of the economy. So I would just encourage everybody to follow microfinance and have a deeper look into it.
Surely, sir, and surely look forward to many more enriching sessions with you. And with this, I thanks again. And guys, like those who joined late, the session is recorded, and I'll be placing it over my YouTube channel, the link to which is pinned to this spaces. So surely you can connect with us for more such enriching sessions where you'll talk about the sectors and intricacies of the sector to say. So thank you, Sadaf sir, once again. And with this, I take everybody's leave. Thanks for listening patiently. Thank you.
Thank you, everyone. Good night.
Thanks, sir.